All right, everybody, welcome to another episode of Dollars with Decker. Today, I am so fired up, not only because he's the absolute most well-known mortgage individual on planet Earth, has done $10 billion in closed loans, but more importantly, he's been one of my close friends and really helped me with my entrepreneurial journey when I met him 12 years ago. This guy not only just he's been kind of defined as the number one loan officer in the entire country, but he is so much more. That's just one facet of his business. This guy gives more back to the community with his involvement with obviously the Boston Children's Hospital and so many other investments. I'm super excited to welcome my boy, Shant Banosian. What's up, brother?
Hey, man. So great to see you. Honored to be here. And, it's been a privilege being your friend going back to when we were young pups in this mortgage business together.
Yeah, and it's funny because I remember when I first came on at Guaranteed Rate, and I kind of came on and, you were already number two. I think it was only Joe C. and Ben, maybe it was you were number two or number three at the time. And, I sat down and, I was kind of intimidated to talk to you and Ben and Joe C. back in the day. And, you kind of pulled me aside and we sat down and we kind of talked about your upbringing and that's where I don't think a lot of people, when they meet somebody like you, they don't realize that you didn't just come from some silver spoon fed family with a degree from Yale that was just took over their dad's mortgage company, and I think it's so important for people to realize that. And, why don't you just kind of share? Because I think it's a lot to do with the grit that you have is from that.
Oh yeah, man. 100%. I would say my upbringing and my perspective has been shaped by kind of the environment I grew up in. And my parents both immigrated to this country in the late 70s. They both came from the Middle East, trying to escape war-torn countries and trying to come here for a better life. And they both came here and had to kind of start from nothing, literally and build a life. And they met each other here and they built a life together. My dad was an entrepreneur, built a construction company. He had a degree in engineering, but had to come here and just hit the grind, and built a company and built a real estate portfolio and all these things. And I watched that, I watched that from very, very the beginning, and mm-hmm. I was observing it the whole time. And now I look back at it as an adult with kids myself, and I was paying attention to what was going on. And, I saw his journey from starting his own company. I remember vividly, when he was the only employee to the success that it created and the fulfillment that it had. And I remember being proud. I know he's extremely proud of it. Yeah. And so it just showed me that you can get kind of dropped in this country in your late 20s without any friends, without any family, without really anything. And then just the opportunity is endless and you can make it. And I've got a lot of, I grew up in the Armenian community here in right outside Boston, and there's the mixing pot of different cultures and all that kind of stuff. And I will tell you that what's really cool about this country and what's really cool about, especially that immigrant mentality, mm-hmm. It's the opportunity in the United States is endless and you can make whatever you want of this place. It's an amazing place. So I've always appreciated it and seen it as an opportunity. And that's kind of what's always been ingrained in me. But I certainly did not get handed anything. I come from a very small community and I went to a small college. So it's not like I graduated from college or kind of entered this business with a network. In fact, I got started in this business in 2007 and 2008 when everything was collapsing around me. And I was actually thinking about getting out of it. And I just went for it. And that's kind of when I made it. It was the best decision I ever made in my life.
That's crazy. And one of the things I love that you brought up and I notice is a lot of times in today's society, people, they're like, oh, it's not really fair. The 1%ers have this or this. And what I've noticed being somebody that's born, here in the US, and my dad was a forklift driver, so I grew up with it. But what I think I've noticed is people that are either immigrants or first generation Americans have a much different view of the opportunity in the United States. And they kind of bear that upon themselves. It's here. I just got to go after it. Whereas a lot of people, when you get multiple generations in America, they're kind of like, well, when's going to be my opportunity?
Yeah. Nobody's ever going to hand it to you. There's no such thing. If you want the opportunity, you got to go out and create it for yourself. But the cool part is I'm confident that if the mortgage business ended tomorrow and ceased to exist, I'd figure out a way in a new industry to go out and figure out, make it happen. Because like, you know, there's always an angle, there's always an opportunity, there's always a value you can go out and create. There's always a way you can differentiate it amongst all the different people out there, no matter what kind of business you're in. And then, you know, frankly, like the most successful people, and I believe this, and I think you'll agree with me knowing you this whole time, like the most successful people aren't always the most talented, right? Yeah. Almost rarely ever. Actually, the most successful people are always the hardest working, the grittiest, the ones that are the most focused. There's a whole lot of people out there that are a lot smarter than I am. There's a whole lot more people that are like, that know things that I don't know. But like, I'll go heads up with anybody when it comes to go out and creating something, go out and having success, and go out and putting effort in, go out and being focused. Yeah.
And it's funny, like a quote that Matt Ishbia told me one time, you know, and he kind of said something very similar to me. And he was just, so for those of you guys that know, Matt Ishbia, he, you know, owns the NBA Suns, the Phoenix Suns. He owns United Wholesale Mortgage, one of the biggest mortgage companies. And, you know, he became a billionaire multiple times over by the time he's like 40. And one of the things he said to me is, he said, Brian, what happens a lot of times is when people are really, really intelligent, they let perfect get in the way of good. So they never get started. And so what happens is when you have somebody that has grit, and that's somebody that's been like yourself, a former college athlete, somebody that just wasn't born with the skill sets of Michael Jordan and had to use grit to try to even the playing field, they like establish that pattern of like, you know what? I may not be the smartest. I may not be the most talented, but guess what? I'm going to work harder than every other human being out there. And that's the one thing that I can control, you know?
And that's very well said. So
you know,
true.
And so one of the things I had, you know, because I think I wanted to have you on specifically because I think the world knows a very different Shant than the one that I know. They just know you as the guy that talks at every single mortgage conference, the guy that's like the poster child that every loan officer wants to be. But I know you more as like the entrepreneur. Just from our mutual friends we had, you were one thing I always really respected about you is I watched loan officers that were doing a 20th of your volume buy Ferraris, Lambos, all these other things. And you stayed living in the same house for a long time. Yeah. You lived on a very small percentage of your income and you started investing like even before I did, you know, like was that something ingrained in you from your parents, or like, how did you have that discipline to live so far below your means when nobody else really did?
Yeah. You know, I think part of that is like growing up in humble beginnings. I think part of it, the other thing was, you know, starting my mortgage business in 2007, 2008, like it was all ripped out away from a lot of people. Right. And so that was like something that like I very much paid attention to and knew that could happen again. If, you know, cause I saw a lot of really like quote unquote successful people all of a sudden weren't successful just after like the business changing for like 6 months or a year, not even that long of a time frame. Yeah. So I was like totally focused on making sure that like if the business was terrible for 3 years or 5 years, that like I could withstand anything and keep doing all things. So like savings was very, very important to me. Investing was very important to me. I do believe that like, you know, you've got to have your income, but you've also got to invest in companies and assets and other stuff that are growing even while you're working. Right. And so like, you know, and I stuck to the basics, man. Like I'm not super complicated. I've probably gotten a little fancier as I've gotten older and I've been around different people and different ideas. But like at the core group of my success always was like two things: investing in the markets and investing in real estate, right? Like proven winners, right? And sometimes like we tend to get so fancy, but like, you know, like that's what I was like, all right, if I can establish from day one, buying some real estate, holding it, like that's proven winner, no matter what happens, like that will always win. And if I can invest every single month in the market, like the way compounding interest works and the way these companies growing and investing in the US economy, like I'm always going to, and at the end of the day, like they're so simple and easy, but like the consistency at which I approach that, like I've never not invested in any given year in real estate. I've never not invested in any given month in the stock markets and investments and like, you know, those type of vehicles. And then as I've gotten exposed to different things, because like, you know, in your 20s and early 30s, you're not sometimes exposed to people and ideas. And as I got into my 30s and 40s, I started investing in companies and in private equity and, you know, other types of like development deals and all these type of things. But, you know, I had to just, you know, you got to get the basics first, in my opinion, before you start doing the other stuff. And I'll tell you, the other stuff, even though it's sexier and fancier, it's also a lot harder. Right?
Yeah, and I think that's what's so important to hear. Because I mean, for those of you guys in the mortgage industry, I know many of you guys were like, "Oh my God, I cannot believe Shant was just buying real estate and investing in stocks when he was doing." But you nailed it. And the thing is what I've learned is we are inclined as entrepreneurs to chase risk for big reward. And so we have to kind of fight that. Mortgage is a risky business, right? I mean, it just is. We're only as good as our last month. And so when you actually start your investing strategy on those basics, and you just look at stuff over compound time, and you take the S&P over the last 30 years, you're 10% annualized. Real estate, the same things. And so when it came to, let's say, your investments, now let's just talk about, some of the stock stuff. Were you traditionally just buying like indexes, or were you just buying some of the basic, like what were you kind of just ballpark investing in? Like what types of stuff?
ETFs, indexes, mutual funds, like very basics, and then, like, I'm still utilizing like life insurance policies, because the earlier you get into that stuff, the cheaper it is, and it's like, those are home runs. And like, I even got, as I've gotten older and fancier, like I've got stuff, with my children, and things like life insurance policies that are going to be amazing gifts for them, and amazing ways to kind of help get them started in their future, with my responsibility, and like, obviously I do all the traditional stuff, but like, to me, what's made me a lot more comfortable taking big risks and chances as I've gotten older is I've got that foundation that like, I almost can't screw up. So like now I'm a whole lot more aggressive with risk, because like I've got like my base where like my family's kind of like all set. Like, as long as it's like I can go out and take shots now. Whereas like I wouldn't recommend, and again, everybody's their own. There's, but like you've got to go with what works for you. But like some people would start taking risks from day one. And if like those risks don't come through, then you start altering your lifestyle and you start altering your decision-making. I've never been in a position where I've had to alter my decision-making in anything, because like I kind of set it up the right way at first.
Yeah. And it's funny, like I probably in 2009, I started investing in literally just the S&P 500, buying SPY and buying Apple. And it's funny, like people ask me today, like, what's your best investment you've ever made? And if I'm like, well, outside of some crypto stuff that's high risk, it was that stupid buying the S&P and Apple stock, of investing like 10% of whatever I was making just every month on auto pay into a TD Ameritrade account. And it's literally, and most people, like I was doing some teaching over the weekend, and I had a question from somebody, and they were just like, well, you know what, Brian, like I know that there's just no way on $80,000 a year that I'm ever going to be able to get X, Y, and Z. And I was just like, dude, listen to this. You're 30 years old. If you take $500 a month, every month, and just buy the S&P 500, take $100 a month and just buy Bitcoin, and then just once every 5 years, save up have money for a 5% down payment primary residence, and move from your current primary residence, rent it out into another one. By the time you're 65, you will literally have a net worth of $14 million and be cash flowing $35,000 a month. And you will have never had to put in a bunch of money, just because of the beauty of compound interest. And I just think people don't realize that they need to start investing until they get closer to retirement age. And unfortunately, when they do that, they miss out on all the biggest years of growth, which is in your 20s and 30s, Yeah,
I mean, I will say I got started in my 23 years old investing in the stock markets, and 25 years old investing in real estate. And, looking back at it now, I wish I started earlier in both.
Yeah.
I could have, it's possible, right? But it's, there's always a little bit of fear, but I've always kind of done set it and forget it for certain things. And then, I feel like, thanks to you, I'm doing some stuff in crypto now.
Yeah.
And, I think what you've done is a really great job in terms of just like doing a really great job. And I think it's important, right? Like I will only invest in something if I pretty much like understand what's going on. And like, you do a really great job communicating what is a pretty complex thing in like a really simple way, which is a gift.
Thanks,
right?
Brother.
It's like, that's super important. And I think when you're looking for your advisors and you're looking for people that you're going to kind of rely on, like you got to be able to understand from people that can communicate it to you in a level in which you're going to understand it. And I think that's super important. I've always gone out and searched for advisors and mentors and teachers that can communicate really complicated things in a simple manner.
Yeah, because I always say all the time, an investment in an asset is never going to gain traction if the average person can't understand it. It's as simple as that, And when it comes time to some of your real estate stuff, when were you always kind of buying stuff just like in your area, or kind of like, what did that look like on your current, like you're starting out? And then what does it kind of look like as your portfolio and stuff now?
Yeah. So, I mean, it was always my area, right? Like, so I was buying 2 and 3 family houses within my geography, residential units. And, I just kept buying and buying and buying. And then it eventually turned into some commercial real estate. Then it turned into, a lot of developments, like buys and flips. I still love as much as I like the development, and there's always that opportunity for like the big gain. It's like the buy and holds, like there's nothing like it, right? Like there's something really powerful about your rents coming in every single month, you having some cash flow, right? But you having somebody else is paying down your principal every single month. Somebody's, paying your interest. The houses are all appreciating based on the total value, right? And it's like, it's awesome. And like that in itself, where I've accumulated this now at, I'll be 44 in a month, in itself is like a winner, right? But I eventually moved it over to some commercial real estate holdings as well. I've done some, again, as I've gotten into some like opportunity zone deals across the country. I'm doing a development in places like doing one in Miami right now that I invested in. Like, they play all over the country. Like, I've done some hotel deals in Nantucket and Martha's Vineyard. So like it's just like you just kind of go where the opportunity is, and like what happens is you start to have conversations like this, and you start to make relationships like I've made with you and other smart people. People start bringing you on deals because they know you're interested, and then one of the things I've learned is you don't just say yes to everything. Right? First, when you get excited, you're like, oh, that person's a winner. Like everything they're going to do. Then you realize that like not everyone's a winner, right? Yeah. And so like you kind of got to know your people, and then you've got to figure out like the right questions to ask and really kind of see what they've actually done in the past, right? Not just like based on theory and them being excited about this new opportunity. Like you got to see if they've been successful operators in the past in like-sided businesses and also other businesses as well, because it does. Yeah,
and I think you nailed it, because I was that same way too. I got my clock cleaned on a couple deals because I was just like, oh my gosh, this guy I look up to just asked me to invest with him. Like, I don't want to ask any questions because I don't want him to think I don't trust him. And reality is, if you ask the right questions and the right questions, they respect you a lot more for your due diligence, and they're willing to share. And if they're not willing to share, it's the biggest red flag ever on a deal. And it can save you, so much money. Because I think, like you said, though, is most people always ask me like, hey, Brian, if you had $100,000, where would you go and kind of buy it? And where would you put it? And where would you do this? And most times I just tell people, I was like, well, what do you have right now, like as far as your investments go? Because if you have a good balanced stock portfolio and you got some real estate, okay, we can play with some exotic assets a little bit, but even then, only the proper allocation towards it. Because if you only have 50 grand, you only have 100 grand, you need to be focusing on wealth preservation, not, oh, I'm going to try to hit a big winner. Because it takes you, if you lose a bunch of money and you don't have a lot of it, it takes you a lot more time to remake that money, and you lost all those years of compounding interest, Yeah,
I mean, totally. Look, I learned a lot. Like certainly, fortunately, I've won more than I've lost, right? But the losses, I've done a really good job of using those as learning experiences, because they sting. Like it's like every time I take a loss, I look at it as like, I could have paid for my kids' college or my kids or like something else, or just kept it in the market and like think about my lost opportunity. So you just try to like,
what were some of those like? What was one that you lost on, and what'd you kind of learn from it?
So one industry, the worst deal I've ever done was, and this is going back to 2020, 2021, when it was like the mortgage business was really good. So I was taking probably some risks, and I invested in a company that was kind of making a play on NFTs, and specifically with like college and professional athletes. And, I just invested. It was a group of friends investing with this guy. The guy had no business starting a company. I didn't ask the right questions because I was really too preoccupied with the mortgage business and what was going on. I didn't really understand that space, but it was sexy. Like crypto had blown up. Seemed like NFT was like the next thing. And, I just invested in totally like the wrong person. Like he was like, wasn't fit to run like a Dunkin' Donuts, never mind like a company. And so I just didn't ask enough questions, and I didn't understand the business. I'll probably never invest in any type of restaurant business ever again. I've never done well in those. Like, again, those are like sexy things that like, like it's just not for me, I like making plays with, you know, I like owning the real estate and I like owning the companies. You know, and I'm much better at finding the operators, because I got burned by a couple operators that had no idea what they were doing, and I didn't know they didn't know what they were doing because I didn't know what to ask. So like you do have to make mistakes, like you have to. Everybody does, but you know, I would say restaurants, I'm out, and like just like operators that can't really explain. Like it was like I got caught up in like the whole this is like a shot that I'm gonna take. If it works, it's gonna be like a 100 to 1 type deal.
Yeah.
Whereas, like, you know, bottom line is like, you know how it is. If like you can do like 4 to 5 to 1 or a 6 to 1 return, like you're crushing life.
Yeah.
But like, you know, when you start kind of, your reality gets a little warped and you get kind of too excited, it's like you start making bad decisions.
Yeah. And one of the things I think that you nailed, and I think it, even though, you know, most people always are like, well, everybody in real estate and mortgage tells you to buy a house at all times and this and that. And the way I always kind of look at it is you are never going to ever be able to understand the economy and all the variables and multiples that kind of play into it to allow you to always have like, I'm going to be able to make a safe investment and I know it's going to go up 20%. The one thing that we all know is that people need a place to live. There's not enough housing that's out there to be able to do it. And rents go up over time. Right. And so when you're looking at it, one of the things that you really struck me is like, you always kept buying real estate. Right. You know, and that was one of the things that I always did was, you know, I would always try to buy like 1 to 2 rental properties a year. Like, even if I had to sacrifice a little bit to do it. And I remember buying sometimes in like, you know, even like 19 when rates were starting to go up a little bit and everyone's like, oh, the market's going to crash. And then I look at those assets, and I think it's important that people understand is, I mean, I'm sure you're this way. I want to hear your thoughts on it. Is there's been times when I bought in real estate and I've been like, oh man, like, I don't know if I'm buying at the top of this thing or not. I mean, have you ever been there in that?
Oh yeah. I mean, look, in 2020, 2021, like I was buying, you know, and, you know, even last year, the year before, like, you know, it's like, but then it's amazing. You're like, what happens is like, as long as you're smart about the rents coming in, like the value of the property doesn't really matter that much. Because like when I'm making these purchases, like truly, like I have zero intention on selling them really ever. But like, you know,
and when you do that, when you look at that, are you strictly right now, are you sticking more in like the 4-family and under stuff right now? Is that primarily what you're kind of looking at as well?
Yeah. I mean, those are easy for me because like I feel like I can make a decision on that so quickly and with confidence, right? However, you know, now I'm like trying to figure out how I can buy, you know, a much bigger property, something that's like 20 units, 50 units, 100 units, right? Because like it just, you know, and like in different locations, like, right, you know, like, you know, because like ultimately you're right. The rents go up no matter what. Inflation happens, rents go up. The economy goes down, rents go up because people, you know, like rents always go up. Like very few things will drive rents down. And like ultimately, like it's always better to be the owner of the real estate than it is to be the renter of it, right? Like the average homeowner in the United States, according to the Fed's, worth like $400,000. The average renter in the United States is worth about $10,000. So like ultimately, like renters are making homeowners rich, right? Like, and like that's just the way the system is. So it's like what I try to do on the mortgage side, you know, and that topic of conversation is how can I educate and coach, you know, my renters to become homeowners so they get on the other side of the equation, right? Like that's just like the way it is.
And one of the things too is with that, because I definitely want to, you know, talk because you really are. So like right now with a lot of people, especially listeners to this, we have a lot of people that maybe they just own their current home, but they don't own any rentals, right? And they're really, their only assets are either their equity in their house or maybe their 401k, right? And so if you have somebody and you know they're going to be a W-2 wage worker, which is amazing, they have the stability in doing that. What are your thoughts when you get somebody coming to you and they're like, hey, should I pull some equity out of my house to buy a rental property? What are your thoughts on that?
Yeah, I mean, I think you should pull it. Like, yeah, absolutely. Because like ultimately, the beauty of, let's just say you're a first-time home buyer trying to buy a place for $700,000, right? But like you can put down only 5%, right? So 35 grand. Well, if that house goes up 5% next year, all of a sudden you've made 100% return on that 35 grand that you just put in, because the real estate's appreciating on the total value of the asset. If you take that $35,000 and put it in the stock market, even if it goes up, it has like an amazing year and it goes up, 20%, you just made, you just made what, $7,000, right?
Yeah.
Like,
Yeah.
It's like, like that's not like, so like that's the power in real estate. So like, I think you should be utilizing your equity position to make smart positions, like in using leverage, and not just your equity. Like, some people, and I have coached a lot of first-time home buyers in this, you can utilize the equity in your 401k. You can utilize the equity in tools like IRAs or life insurance policies. Like, it's not just real estate that has like quote unquote equity. It's, that you can use these assets to buy other assets while the existing asset still continues to grow. Right.
Yep.
And
I think that's so important. And people ask me this all the time and they're like, well, Brian, I bought my house for $500,000. It's worth 800, but I only owe like 350 on it. Do you think what do you think I should do? And I always tell them all the time, guess what? Your house does not care what debt is attached to it to appreciate. It's not like a family where they're like, well, you know what? I'm not going to be able to go out to dinner because we got a bunch of credit card debt. Let's just stay home. The house, it's a thing, and it's going to go up in value based on controllables that are outside of anything to do with your debt. And the fact is if you just let the majority of your net worth just be unused, the chances of you getting wealthy are almost nil to none,
Yeah. I mean, look, banks take your money, right? You deposit your money in the bank, and the bank will give you a small return on that. If they give you 5%, they're making a big deal about, hey, you give me your money, deposit it here, and we'll use 5%, because they're going to go out and take that money and use it to make a bigger return. So you can effectively be your own bank and use your own equity, whether it's in your mortgage, whether it's in a line of credit, whether it's in a life insurance policy, a 401k, an IRA. There's all these vehicles, right? And use that to buy other assets. I'm not saying liquidate or take out a loan against an IRA or a 401k or a home equity line of credit or something like that and go buy a car or go on a vacation. Yeah. But if you're reinvesting them in other assets, that those assets are now growing, right? Like you're winning, right? And if you buy a 2-family house, for example, or a 4-family house, and all of a sudden that down payment you use comes from your home equity line on your primary residence, all of a sudden now you've got cash flow coming in. It's paying that mortgage, it's paying your line of credit, and it's putting money in your bank account. Right? Like, what's more powerful than that? Like, you're working, you're understanding the system. And look, I wasn't there like when I was 25 years old, and I probably wasn't even there when I was 30. But like, once I started like paying attention and seeing how it worked and did my first one and did my second one, you start to get more confident. I flipped my first piece of real estate, a different type of investment. It was $100,000 purchase, right? I was at that job site every single week, like showing up, making sure, all that kind of stuff. And then we just did a condo conversion right outside Boston, where it was like a much bigger acquisition price, like 20 times that, right? And I literally went to the site one time. Like, now I've got the formula down, I've got the partners down, I've got everything down, and like I'm a lot more comfortable with it. So nobody wakes up and just has it figured out. You've got to do it, you've got to try it, you've got to get mentors and coaches, and then you've got to just like make mistakes and feel the pain a little bit to make sure you don't feel the same pain over and over again, but also have the successes with it and build that confidence and be prepared and all that kind of stuff. So like, but real estate's a really, really powerful thing. Some of the wealthiest people in the world, like the tycoons of the world, like whether in many different businesses, didn't just get successful off their businesses, but it's also the real estate holdings behind it. Well. And it has the tax benefits. I mean, that's like, even this year will be a really, really big year of capital gains in crypto on it. The first thing I'm doing is I'm going out and I'm going to acquire some assets to cost seg them to offset my gains, because obviously, still owning a mortgage bank and being technically a real estate professional, I can use that as an active loss against my active Capital One gains. And so it's that double win. And that's where I think that real estate really hammers home. And it's still like, it's probably, if I look at my stuff, it's a big portion, of it. And one of the things I think that's going to really provide a lot of opportunity, and what I think you nailed is you did not just wake up just because you're a mortgage loan officer and doing it in your career and know any of this. You invested, and outside of work, I guarantee you
you read books, listened to podcasts, watched YouTube channels. And I just think that most people, they feel like it's out of reach, and it's not out of reach. The only thing that's really keeping you is you not being willing to put in the work on the weekends. You'd rather watch TV or go out with your friends rather than sitting at home and doing that. And I know for you in the last couple of years, and this is one thing I kind of want to finish you up with because it was amazing to watch, is you were always somebody I looked up to, and were one of the only people I've ever met in my life that has that could work like I work. Like, me and you would always text in the morning, and we would text all the weekends, and we would always respond in like 0.1 second. But one of the things I knew for you is you had always been a D1 athlete. You had always been like, I need to get my health together. I need to be better about that, And so what kind of triggered that? And then what have you noticed the changes in from doing that change?
Yeah. So, here's what, I was having a lot of success on the on the outside, right? Like in terms of I was killing the mortgage business. Like I was working really hard, but I wasn't able to do much more than that, right? Like I was tired. I was frustrated. And then I was like, all right, well, what are some of the most successful people doing? And I realized that they were just disciplined in everything, right? Like they were disciplined, consistent, and committed in everything they did. So really kind of I would say about 5 years ago, I was like, you know what? I have to just go all in on everything. Right. And that meant my health, physically, mentally, emotionally, spiritually, all those things. And I will say this, I'm never too busy. I never not have enough time. There's all the time in the world to do everything if you're disciplined and really focused and committed. So I've gotten really good at saying no to a lot of things. Right. Yeah. Frank, I've gotten really, really good at saying no. And I'm unapologetic about saying no. Literally don't care. If it's important to me, I say yes, and if it's not, then I say no. And that takes confidence, right? That's not easy to do in your 20s. But I've my health, I'm at the gym every single, I start my day every morning at 4 o'clock in the morning religiously. I wake up, I meditate, I read, I am at the gym at 5 o'clock. By 6 o'clock, I'm flying out of the gym, and I've already read, meditated, motivated. I'm the energy is through the roof. I'm in bed a lot earlier. I'm eating a lot cleaner. And what that's allowed me to do is I just am able, that energy carries me throughout the course of the day, across the course of the week, the year. And I'm just able to consume a lot more information, have more impactful conversations. I get all of a sudden attract people that are more like me, and get further and further away from people that aren't, right? And that's okay too. But I got all the time in the world to do the things that are important to me now. Right. Yeah. And that's really powerful. And it's allowed me to go and invest in myself. Right. This is Dollars with Decker, right? Is about some of the great investments and stuff. There's nothing more impactful. Forget real estate and forget investments. Those investments in myself, in terms of my self-education. I don't know anybody that is more self-educated than you, Brian. You're thanks, you're always learning. You're just a student at all times, and you do a great job by being a student. That makes you also a teacher, right? Yeah. But that's been the most powerful thing, is just constantly figuring out how I can invest in myself physically and mentally to just grow. And it's the return has been 100x, in terms of what I've been able to do and who I've been able to meet.
Yeah, and it's crazy. I know even when I was younger, people were like, dude, I don't get how you have all this energy all the time. And I've just always kind of ate clean. I've always just been very disciplined because I had ADD as a kid really bad. So I just kind of had to consume myself to time. And it's, when we were kind of talking before we were on the show, I know that there's a lot of hard things that when you're in your 20s and your 30s, I was a yes man. Oh my God, this person invited me to go out to drink. I want to drink. Oh, they offered me a drink. You know what? I don't want to be the guy that's oh, you're too good to drink, to deal with that. And there was all these social norms that kind of affected me. And then I think a lot of times what happens is you get success, which builds confidence. And then you just kind of get the, I really don't care mentality. I don't at all. If it offends you that I don't drink and you want to go eat, that's your problem, not mine. I want to wake up good on Saturday morning and Sunday morning with my kids, go to church, do all these things. And you're doing it wrong. I'm doing it right. So why should I feel guilty for doing it the right way? Right. And I know you were talking the same thing is when that happens and when I call it rhino skin, right? You get that rhino skin where there's just there's nothing that people can do to convince me to go do something that I don't want to do anymore. And I think that just comes a little bit with age. I mean, was you kind of the same way on that?
Oh, totally agree. Like, look, I wouldn't have been there in my like 20s or maybe even early 30s. You kind of just got to get there on your own, and you kind of same thing, trials and errors. But like, can I tell you, like, it's the most, it's like the best, right? It's like where I'm at in terms of like who I am, where my confidence is because of like all these learning experiences. Like, it's an amazing place to be. And it's like, it's allowed me to just, be a better father, be a better husband, be happier with myself, like have less conflict internally and like more confidence. Right. And then just like, you start like attracting just like really awesome people because like, you're more focused. You're frankly, like you're more interesting, right?
Yeah.
When you're like always like learning stuff and like, just kind of invest. Like people want to hear what you have. Like, if you texted me tomorrow and were like, hey dude, like you should take this course or like you should go to this seminar or you should read this book. Like I'm doing it. Right.
Yeah.
Like, because like, I like really care about like who my circle of influence is in my life. And like, I'm also confident to know like who those people are, but my mind's clearer. I'm more focused and I'm more confident in myself. And I'm also like, you're free when you raise your frequency, you just tend to attract different people. And you also kind of like, some people are also like intimidated by it. And that's okay too. Like, it's like, I don't do that intentionally, but like, I'm just, I know who I want to be. And I know kind of the type of role model I want to be. Just like I said, I was watching my dad when I was a kid. Like, I know my kids are watching me always, no matter what. And, I'm certainly not perfect, right? Like I screw up all the time still, but I'm all obsessed with getting better and learning from my mistakes.
Yeah. And kind of one of the things, kind of the last two things is, number one, what is from, when your morning routine, when you're reading and you're doing that. So let's just say like, what is one of the things that you have found from either like reading or a podcast or a YouTube? Like what's one thing that just kind of really helped you start to grasp some of the investing stuff? And then number two is like, either what is the most recent investment you made or what's like your planned next investment?
All right. Got it. So by far and away, reading and podcasts, reading, I'd say is one, just cause like, I just love to read. Like I'm always, every single day, it's like, I'm reading something, right?
What are you reading right now?
Right now I'm actually, I just picked up yesterday, Elon Musk's, the Elon by Walter Isaacson.
Yeah.
I'm like, that's a big one. I grabbed that yesterday. I grabbed, and then, oh my God, I'm going to fumble the title, but Adam Grant's book, Think Something.
Oh yes. I know what you're talking about.
I just ripped off, Robin Sharma's new book, actually. The Wealth Money Can't Buy. So I just finished that. Dude. Great book. I'm a huge
That's
Robin
a great
Sharma
book.
fan. So I literally finished that on Friday. And so I went to the bookstore. We have a little bookstore in our town. I just picked up 40 books yesterday. So
nice. I love it.
But reading is awesome because here's what I'll tell you about it. Like, I'm a huge Ryan Holiday fan. I got a bunch of stuff behind me.
Yeah.
Like, I could go on and on and on. I actually, but it allows you to kind of like, it always like shows up in the right time. Like something comes at you, an obstacle, a challenge, an idea. And like, if you're just constantly reading, like, it's amazing, like how that transfers immediately into like helping you or helping somebody else.
Yeah.
I do podcasts now whenever I'm driving. I don't do the radio anymore. I like TV. I never watch the news.
Yeah.
Like, I'm just like trying to consume content from people that I respect. So it's probably been the best thing that that's helped me grow. I wish I attended more, like some of the masterminds and some of those things. Like that's something that like I want to go attend as like a attendee as opposed to like being a speaker at some of these conferences. That's the next thing I'm going to do to kind of up level my circle. But in terms of investments that I'm working on right now, I'm an investor in a company called Healing Realty Trust. With the mutual friends of ours, it's a real estate play in the psychedelic space.
Sweet.
Very, very, very excited about is like those new therapies kind of come to life. We're focused on helping kind of build out the real estate that is going to support those therapies where, like the medicine and the magic's going to play out there. So we're not going to operate.
Oh, that's awesome.
We're not operating clinics, but we're going to build out the real estate that the clinics around the country are going to operate within. So it's another real estate play. Really exciting space that, is also fulfilling because it's going to help a lot of people. So that feels pretty cool.
Yeah, and that's so cool. And it's funny because I think like today's day and age, and I won't even go down the rabbit hole, is when we were a kid, we heard like mushrooms and psychedelics, we thought of the hippies, right? Nowadays, like two of my best buddies, they own massive, massive farms, both in cannabis and psychedelics. And to watch like the stories of people with PTSD or people with horrible trauma and their ability to reprogram their brain through some of these psychedelics, it gives them an entirely new life, you know?
I mean, the stories are amazing. And it's like just a massive opportunity out there to help people and to also like create a really great sustainable business that has exciting opportunities. So that's something that's probably something I'm most excited about right now. And in the future, what was the second part of your question?
Oh no, I was gonna say like, well, I was saying if you had done it, so that's perfect. No, that's on that psychedelics and real estate. And then the last thing I wanted people to know is like, because you not only do you speak, you do a lot of this, all this stuff, but also too, I know you're really starting to put a lot of efforts into your socials and teaching, because I think knowing you for a long time, initially when I first met you, you weren't the person that necessarily loved to be on camera. And now you've become an amazing speaker and an educator, and you're putting a lot of more efforts, into actually translating that knowledge to help other people. So what's your best place for people to kind of, find you, like your Instagram handles? I mean, I know you have a personal business, so just any of those places that people can find you, because trust me, guys, you're going to want to follow him, especially it doesn't matter if you're in mortgage or real estate, just in general with the way he does these economic updates.
Yeah, so Instagram and LinkedIn are kind of where I've like really honed in on, and it seems to be working for us, and it's where I'm most comfortable. Just for the record, I still don't love being on video, but I do what I got to do to make business happen and to get my message out there, right? I'm obsessed with doing what I got to do. So like if and it's just important. So Instagram's at Shant Banosian, my first and last name. And then LinkedIn, you can just find me by looking at my name as well. So like we're posting new content, we're stretching out, you get on our mailing list. We'll send you great emails almost virtually every single day. We're sending out quick tidbits of to our database every single day. So we'd love to stay in touch.
Yeah, that'd be awesome. And I'll drop that into the show notes. And, thanks again, brother. Thanks so much for coming on. It's been such a pleasure knowing you for, God, I can't believe it's 12 years now. And even though we've been on opposite sides of the country and really haven't worked at the same company for probably 9 years, we still stay in touch, man. And you're one of the smartest, most humble dudes I've met. And dude, I appreciate you coming on, brother.
Same, man. Thanks for having me. Keep doing what you're doing. I mean, the way you just give back and the way you communicate. And, I've learned a lot from you. And like I said, we don't talk a lot, but like I'm watching and seeing what you're doing. So you've played a huge role in terms of some of the things that I'm trying to do. And I've learned a lot from you. So thanks for having me on today.
Oh, that's perfect.